Can artificial intelligence predict the next financial crash? It's a question that combines fear, hope, and the growing belief that machines might see what humans can't. Let's begin with what a financial crash actually is. It's not just when the stock market dips. A crash is a rapid, massive decline in financial markets, driven by panic, overvaluation, or unexpected events. Think 2008. Think 1929. Think moments when everything felt fine, until it wasn't. Now, can AI see that coming? In theory, yes. AI can process billions of data points, track patterns over decades, and detect small shifts in behavior that humans would miss. It can monitor sentiment on social media, unusual trading volume, rising debt levels, or even changes in language used by CEOs during earnings calls. These signals often precede a crash, but they're subtle, complex, and lost in noise. That's where AI has an edge. For example, some hedge funds already use machine learning to detect early warning signs. They look for unusual correlations, predictive volatility, or pressure points in global credit systems. In 2020, certain algorithms flagged COVID-19 disruptions before the public markets reacted. But here's the problem: knowing something might happen is not the same as predicting exactly when and how. AI can say, risk is rising. It cannot say, on October 14th, the market will collapse. Why? Because markets are part data, part psychology. Human emotion, greed, fear, FOMO, panic, these things can't be fully quantified. AI can see that retail investors are buying risky assets, or that leverage is high, but it can't fully model how fear spreads, how governments respond, or what black swan event will hit next. So what's the answer? AI can't predict the next crash with precision, but it can warn us that the probability is rising. It can analyze things like over-leveraged credit, inflated asset bubbles, rising default rates, geopolitical instability, or overexposure to risk in sectors like tech, real estate, or crypto. It can build probability models that say, something is fragile here. Something doesn't add up. Today, many experts believe AI may not prevent the next crash, but it could help reduce the damage. If institutions use it correctly, it might act as an early alarm system. But if ignored, it becomes just another voice shouting into the storm. So, will there be a crash in 2025? No one knows for sure. But AI is already watching the signals. Rising debt. Global tension. Market overconfidence. It's detecting fragility, patterns we've seen before. Will we listen? The real danger isn't the crash. It's being blind to the warnings. And this time, we don't have an excuse. Because artificial intelligence is already whispering. Pay attention. AI.